All right, everyone. Happy New Year. Happy 2024. I wish everyone a blessed new year, full of health, wealth, success in your trading. God bless you all. We haven't had a chance to connect in the last few weeks. I just took some time off from really trading and everything. It was holidays. So we're now back in full swing. So let's just get down to business. Let's kind of look at where we left off and then analyze what we're going to do for the coming week. I don't anticipate a lot of trades were taken by you this last few weeks. So let's just dive right into it. So a few weeks ago, as we look at the queues, let's start with the queues right now because they took a beating today. I mean, everybody took a beating, but the queues took the most beating. So let's just start there. A few weeks ago, we had formed a pennant, and from that pennant, price used a gap area to find support, and then it took off again. So we had said, and I think we've even done a video on this, that if price breaks above the flag and uses the flag as support, it goes up, or it breaks below it, it could continue to go down based on this gap, but it used this gap as support. Excuse me. So instead of you know going down for capturing further gaps, what price did was uh, it used this as uh, support, and it went up here. That's really what price did. So this did not take place. So pretty good. Like we always mark our supply zones, uh, and we start with daily or weekly as we look at our charts. But now that we are near our all-time high territory, it's kind of hard to find a supply zone. Your supply zone is done, right? I'll just redraw it. But so that supply zone, when you look at it on a daily basis, that supply zone, daily supply zone, just mark it right. It's pretty much what is taken care of right now, right? Price is moving to that supply zone, gets rejected once, gets rejected again, it gets rejected again. Outside of it, you have multiple things. You have all-time highs, and then you have also the supply zone. As remember, the word is zone, right? So sometimes you have manipulation. They make you believe that price is going to continue to go up, but actually they don't want the price to continue to go up, right? They consolidated for a day last week, right before the holidays again, and then price started to drop, and now it's making lower highs. So are we done with this upward movement? Maybe. If you look at our last Fibonacci drawing, if we look at those previous highs before uh, we have any chance of major retracement, price just keeps going up, right? It only touches the 23.6, even that not quite, and it just keeps going up. And where does it land? If you look at the fib, it's landing at those target areas, right? You have your negative 272, your negative 445, and your negative 618. That's where it's really heading, right? That's why price is going. But again, right, we just keep moving this up to see where is the next retracement, next significant retracement. We're still above the 23.6% retracement from the last time we started to move up, right? We haven't retraced significantly since October. we have had a very, very nice rally since October. So today's movement, it doesn't really say, oh, it's a bad thing. It just says, hey, the market had a nice run up, Santa rally. It it wants to take a breather. And will it continue to breeze? It's yet to be seen. When we look at the futures, they're pretty much flat. It's expected this time of day, futures are flat. So that's not a big deal there. So what we want to take a look at is how do we prepare, how do we trade this? How do we trade this? Right? What we want to look at is now past supply zones. I didn't remove them until we had a chance to connect. Right? All these supply zones are out of the way. They're already well taken care of. This gap practically is not closed. Right? It touched it, it's not closed. So I want to use that gap. There's a supply zone, I mean a demand zone I can put here. That's also very close to this gap. So I'm expecting price could potentially come here, and look where it lines up to that 38.2. Right, our green to green zone is going to become our sweet zone, and that green to green, you have two gaps in there. Right, if the algos decide to completely close these gaps, we're in our green to green zone. So that's kind of a long time. I don't expect us to get there overnight, but if we get there and we use this as support, then we're heading back up. Right, we're heading back up. This supply zone is taken care of multiple times. So that's that. But at the rate this market is going, if we look at the most recent demand zones, let's just draw a few of those demand. This one I already have one close enough here. There could be another one somewhere here, some small consolidation here. 1 hour. Let's just rename this 1 hour demand. So if we look at these three areas of possible demand zones, then price could touch here and go, which will give me confidence to pull the trigger to the upside to make new highs, right? And I'll exit at the new highs, like somewhere here as an entry, somewhere here as a stop, somewhere here, right? Our 2x is near those highs. I would feel comfortable taking a significant portion of that position off, right? So that's something that I want to look at. But to the downside, what I want to see to the downside, again, now that we've gone through a long time, I think we've gone through more than a year and a half looking at just trend following. If we want to look at reversals, this is where we'll say, okay, we're making lower highs, and I'm targeting. So pay attention here because it gets a little bit confusing. We have this longer term since October, mid-October uptrend, and this uptrend in best case scenario will pull back to green to resume that uptrend. So as we follow this uptrend, why not? Let's see if I can use a different color here. Let's use a different color. Not visible enough. Let's make it dark. Okay. So why not take advantage of price heading to that green to green zone? Why not take advantage of that? So that's what we do by reversal. We're not saying capitulation. We're not saying markets is going down. We're gonna go but down 20%. We're saying a healthy pullback is green to green. Why not go for that green to green pullback if price where it is now gives us a lower high and we get an inverted hammer, engulfing, railroad tracks, somewhere in this zone, and boom, we take it for that green to green, right? Somewhere here. And our purpose is to stop if it continues to go up to get our 2x. But I'll draw it all the way here. Like our target is our green to green, right? So somewhere between the green to green, that 50% retracement is our 3.5 to 1. Now, I'm not saying we don't exit. At 2x, we're exiting. That's I always say at 2x, we're exiting, right? 2x or sooner, depending on what we see on the charts. But at 2x, we're exiting, but we're letting some run to our green to green zone, right? It could be 3x, it could be even 4x if it goes all the way to our green to green, right? Close to 5x. So we're going to take advantage of this. That's what I'm referring to by this reversal. So just to recap some scenarios. I'm looking for price to come to green to resume the upside. While we wait for this, instead of sitting on the sideline, we look at price giving us a lower high and a good candlestick pattern to go to that green to green zone. So we are playing to the downside while we wait for a juicier upside, right? So those two scenarios are the same. We want down here to go up, but while we wait for this, we trade to the downside. But the other scenario, what we have been looking at since that October, right, late October time frame, is very, very shallow pullbacks that are really above that 23.6, right? Nothing is going even deeper than 23.6. So it's barely touching that 23.6. So what I want us to consider is, if we want to play to the upside, is here we haven't come down to the 23.6. So could price go up, right? And so this is always hypothetical, right? These lines, and this line could end, today's low could be the end of that line, right? Or it could be somewhere lower by tomorrow and then it resumes. But what we want to do is, once it finds a footing and it makes higher highs, higher lows, and we see a candlestick pattern, our hammer, my favorite is a hammer. But if you get a hammer or you get engulfing railroad tracks or a flag, we take it to the upside, because this green to green is not yet in the picture, right? So cues, this is how they're setting up, right? Lots of trading, lots of opportunities. Whichever direction it wants to go, we have opportunities. And I like this setup because we're not glued to the chart, right? We're watching it every hour for just a little bit. We're not glued to the chart. Spies. What are the spies doing? We have some supply zones that we have drawn that are already fully taken care of. So we don't care about those anymore. We actually now care about demand zones that are forming as price was heading up, right? We care about these demand zones that are forming. Now, if you look at, I want to add something here. I want to show you something. If you look at how the spies and the Qs compared, right? The spies, they held stronger during the recent downturn, like all of last year's downturn. The spies did a phenomenal job of holding that position, and even now the spies are not collapsing, per se, but they're not going as far down as the Qs. Now, once technology takes off, technology will take off and give us significant better results. But for now, the spies are losing less. They're holding their grounds much better. Like much better. So I just wanted to add that. for comparison purpose. So here, let's remove all drawings. So we stayed in this channel. The spies, if you recall, stayed in this channel for a while. Even if we extend this, right? If we extend this without, I'm gonna keep the original channel, right? I'm not trying to adjust it. So price, keeping the original channel, price remained inside this channel, right? So right now, what we want to see, like if anybody who did not take advantage of this last couple of weeks of trading because of holidays, what is price telling us, right? What are the fibs telling us right now? If we go to these highs, spies are not quite as high, right? We have not reached all-time highs yet in spies. In Qs, we're about there. In spies, we're not quite there. But we're in the supply zone. Because the supply zone still has some room, I'm just going to leave it. This one, I have less confidence in trading the spies. Yes, we're above the 23.6, but if you look at this area here, oops, this area here, area of interest. If you look at this area here, it looks like some sort of consolidation, right? Price bouncing up and down. But this could also be an area of distribution. Remind me again, I think we need to take one session and talk about Wyckoff's accumulation distribution. I think it would be worth good exercise, but this could be a significant area of distribution. Distribution means, just without going into the technicals, just means institutions are using this area to dump. And accumulation means they're using that area to accumulate, to buy stocks, right? So that's what it is. So in a distribution, they don't dump everything at once, because if they do, price will immediately go, from here, it will immediately go down here, right? They don't want that. They want to sell in this area all of the shares that they want to sell. That's their goal. Their goal is to dump in here. They don't use the word dump, but that's what they're doing. They're dumping it in here. I mean, think about this. If they bought down here, they had a nice run up, so it makes logical sense for them to get rid of some of their stocks. So they started to sell. As price starts to move down really fast, they stop selling. They let price go back up, they sell some more. They let price go up, they sell some more. Let price go up, they sell some more. So that's what they're doing, right? So in this distribution area, this could be the last place where they're saying, hey, we're gonna let this go up here, and then we're gonna take it down here. That's a possibility, right? They could want to take it to this green to green zone. So if that's the case, let's just go to our regular color here. If that's the case, what we want to do and see is maybe, so lower high, 1 2 lower high. We kind of didn't get a nice signal here, so maybe we want to wait here for our green to green journey, right? As we go down, we take advantage of this opportunity, and so this is our trading, right? This is our trading possibility. If not, then if this holds, then we want to see it start to go up to to the upside. Now that is a bit tricky for me because we're uh, near all-time highs, right? That those all-time highs could get in the way initially. Logical stop. If we want our 2x risk reward, 2 to 1 risk reward, we're right up against those all-time high areas. So we just want to be mindful of that as we prepare for this coming week ahead. So tomorrow should be interesting. It was a short week this week, but still, I think more and more people are starting to come back into the market. If we look at the daily, I think volume is a good indicator for us. Like if we look at the SPYs, we're above the average volume, the last 21 trading days average volume. We're above it, which means it's a healthy uh, market, right? There's a lot of participation. During the holidays, it started to die down a little bit. During Thanksgiving, it died down, but it's picking up now. Now we're gonna get back to normal, and it's gonna start to pick up. Right, so that's what we want to see, right? We want to see our volume be strong, so we know all market participants are in. All right, just real quick, I just want to go over IWM. IWM has been really strong, but again, if you recall, I've mentioned about IWM. We have this consolidation zone, and we're still in that consolidation zone. Yes, we had a nice run up since October, but we're still in that consolidation zone. So IWM is far, far from being done, right? Far from being done. Long ways from the highs, far from being done. I would not be comfortable yet taking any short-term position in IWM, uh, like any kind of trading kind of position, because it could go in either direction based on where it is today. If once we're out of this consolidation area, like, or if somebody says, hey, I'm a range bound trader, I love this range, I'm playing the top bottom all the time, fantastic, right? So it's here for you. I don't usually focus on range bounds. I don't study them enough. I don't have enough journaled trades to say they work or don't work for me. Right? They work. Right? We see it here. They work, but for me, it's not my style of trading. Just wanted to make sure we get that clarified. So, but we have our marching orders, and we're ready to go. With that, I think we should wrap it up for today, and we shall talk next week.